Hey guys, and welcome back to Veeth Space. My name is Veeth and thanks for stopping by. In today's video, we're going to be talking about this entire fiasco surrounding AMC, GameStop, and these Wall Street suits as well as Wall Street bets and what they're all about. So stay tuned for this entire video. And before we start, I'd love if you would like, subscribe this video, and why not diamond hand that like button? Just smash it as it'll help my channel a lot. Now let's get into this. So unless you've been living under a rock, almost everyone knows about what's happening in GameStop and Wall Street. So what happened was, a quick recap is, GameStop is a store that you can buy used games or new games depending on what you're looking for. And also, unless I'm mistaken of course, but they sell video game products, that's the gist of it. And they sell in Canada, the United States, the UK, as well as Australia. And their business model isn't that great anymore. It's because you can buy video games digitally. For a PC, you can use Steam, and even with like the new Switch and the PS5, you can buy games digitally through their system. So with that being said, this means that it's not good for their business model because they're not necessarily selling used games. So because of that, these Wall Street hedge funds decided it's a good idea to short this stock because they don't have good business, which means their stock and their revenue would go down, which will cause their stock to tank. So with that in mind, what shorting is, and what Wall Street did, is they shorted the stock. And what shorting is when you borrow stock from someone else and then you sell it in hopes to rebuy it at a lower price. So what happened was these hedge funds, multi-million and billion-dollar hedge funds, shorted the stock, and people got wind of this. Wall Street Bets is the subreddit group that mainly caught this and started this quote-unquote movement. And what they did was they simply got a group of people and they bought as much stock as they possibly can, and they encouraged as many people to buy as much stock as they can. Keep in mind, hedge funds aren't using their own personal money. This money is from the wealthy people, the rich ones, as well as organizations like pension funds and other organizations. So it's not necessarily that when these hedge funds lose money, that they're losing their personal money. It's not that huge of a deal for them. Of course, they may get fired, they're going to get in trouble, but it's not that huge of a deal. But because of this movement that Wall Street Bets, the subreddit group, started, these hedge funds begin to tank in the amount of money they had because they were losing money. Because if the stock price goes up, they're losing money because they still would need to buy back that stock to give back to the original owner. So that's what happened, and that's why stocks like GameStop, AMC, and BlackBerry all skyrocketed, because what happened was people were buying stock, so there's high demand for it, and these hedge funds also need the stock as well, so they're in demand for the stock as well. So eventually, when they need to cover their stock, they're going to have to buy back. And if these people are not holding on to, these people who are holding on, if they don't want to sell it, they would need to eventually come up with a price so they can cover their short positions. So it just kept going up and up and up, and that's where we were at until Monday, I believe it was. And as of today, the stock did go up, as of today at the time of recording, up 10% for the day. And that's basically what happened. So with that in mind, we need to take into consideration why eventually the stock price dipped. And the main reason why the stock price eventually dipped this week and even early parts of last week is after going to an all-time high of $450 per share. The reason it went high, it dropped, was because companies and brokerages, I should say, started to restrict purchase of the stock GameStop, AMC, and BlackBerry. And we don't know why exactly they did that. There's speculation as to there might be a connection between these companies like Robinhood and Melvin's Capital, which is one of the companies that really got hit hard by what Wall Street Bets, I should say, did to these stocks. So it's not sure exactly why they restricted the stock. I don't really think they were trying to necessarily protect their customers, in my opinion, that is. Of course, the details are still coming out. It's not exactly sure as to why they did it, but I'm not necessarily convinced that it's because they wanted to protect people. Me, myself, as a Canadian, I use two brokerages, in fact, to trade stocks, and that is TD Waterhouse and Questrade. And I'll have links to my Questrade referral link in the description below. And I'd love it if you would use that link. I believe you also get a monetary compensation reward for using my link as well as I do. I believe I get a portion of whatever you also get. So be sure to check that out, and if you're interested in using Questrade, use my link in the description below. But it's not a really good look on Robinhood for them to restrict stocks. And I believe TD Ameritrade, which is the TD brokerage for the United States, they also restricted stocks, purchases of stocks. So when you restrict the opportunity for people to buy stocks, but they still can sell their existing holdings and their shares, that would automatically lower the price, because it's basic market manipulation. People can sell, but they can't buy. So the supply automatically increase, and the demand is ultimately eliminated. So it was a terrible act by anyone who participated in restricting the purchases of stock. That's my personal opinion on that situation. However, it's what it is. I believe you can make complaints on it. I'm not exactly sure. I'll look into that, and if I do find links for it, I will leave that in the description below. But main people the main organization you can launch complaints with is the SEC, and they would investigate. And I already know that Robinhood and some of these other brokerages are being investigated. So now, what is my personal opinion on everything that took place? So in all honesty, I read a few articles today, and I'll if I still remember the articles, I'll link those in the description below as well. But I read articles that these weren't actually purchases by Wall Street bets and the common retail investors. It's being reported right now that it was a targeted purchase and targeted event caused by other rivalry hedge funds to try and eliminate some of their competition. So that's also coming out, so I'm not sure what's exactly true. I just read that a few hours before filming this. So with that in mind, many people are saying this is war between Wall Street bets and the average person like you and I and the suits on Wall Street. And in my opinion, I don't really think that's necessarily true. I feel like, in my opinion, that real offenders in this situation was the brokerages that restricted people to buy, because in a free market, everyone should have access to buy and sell as they please. But in my opinion, this is not necessarily war between Wall Street bets and the average consumers versus Wall Street themselves. And that's because at the end of the day, Wall Street will always win. They're gonna get government subsidies. They're gonna get money back eventually, because it's not their own money. They make millions and billions of trades per day, so it's not huge of a deal. So for the person who made this short position and thought it's a good idea, the worst that's going to happen to them is that they're going to get fired. And when they do get fired, what are they going to do? They're just going to go to the next hedge fund, and they're going to reapply and get that job there. Because at the end of the day, it's all business, it's not personal. And as I said earlier, these hedge funds didn't really lose their own money. At the end of the day, we still lost, in the sense that it's organization money, it's pension fund money. So it's people who rely on pension after they retire are usually people, the average person. So like teachers, nurses, and unionized workers. So at the end of the day, it's people still losing. The other thing I want to say is, because of the hype related or surrounding AMC and BlackBerry, GameStop, stocks like that, many people were liquidating from their good positions like Apple, safer positions I should say, like Apple and Tesla, to buy into these hype stocks, which is really detrimental to both the person and their financial situation and the market in a sense. And that's because the reason why stocks like Apple and Tesla are on the S&P 500 is because they're considered blue chip stocks. They're safer investments. But when you liquidate those holdings and they go into these meme stocks, ultimately these stock prices are going to slide. It can be a good thing. For myself it was, because I got a chance to buy more stocks in Apple and Tesla, just two examples of what I hold. But it's important to note that when after liquidating, at the time of when Tesla and Apple were sliding in the values, GameStop was at its all-time high of $450 and just dollars, I should say, And just imagine if you had bought at $450, and I'll insert the price right here as to what it is, the current price of recording. I believe it's around $63, but I'll have the accurate price right here. And it's not a good idea, because look at this. You bought it for $450. Now it's at $63. You just lost money. Whereas if you had held your existing holdings from Apple or Tesla or any of your other positions, instead of chasing a stock that's currently doing quote unquote well, because they're not really doing well, it's just because of hype that it's going up. So it's a typical case of fear of missing out, FOMO. But that's my opinion. People are ultimately going to lose, because you're chasing. At this point, you're chasing. It's not a reliable stock. They don't have revenue. They were basically at the brink of bankruptcy. So that's my opinion. So now, if you're wondering what you should do to prepare yourself and to avoid situations of FOMO and to be financially responsible and make money at the same time, is simply invest in S&P 500 index funds. That's the most reliable and safest. Of course, there's risk, but most reliable and safest way for you and your personal wealth to grow. And that's because, as I mentioned earlier in other videos as well, the S&P 500 goes up year to year on average 10%. So even though there might be years where it doesn't do well, there's other years that do well to make up. And on average, you can see a 10% growth year over year. So that's my take on this entire fiasco surrounding Wall Street bets in GameStop. I need to disclose one thing, and that is that I personally had purchased BlackBerry back in, I believe, October or November, way before this entire hype. And thanks to this entire situation, I was able to see a 500% gain on my initial investment. And I eventually cashed out right at its all-time high, around $34-$35 Canadian. And so I am thankful in the sense that, hey, thanks to Wall Street bets and the hype it got, I was able to see a great return, and I ultimately sold out and never looked back or thought twice about that stock. And I plan to reinvest into BlackBerry because I do feel like there's long-term potential. However, it's one of those things that you need to do your own research, and please keep in mind, before you make any of your personal investments, do your own research. Don't just rely on myself. I'm only a teenager on YouTube, just one person's opinion. So with that being said, invest consistently, do your research, and take care. Thank you so much, and I'll see you next time. Peace.